What's going on, guys? I'm gonna do a basic technical analysis training, just kind of overview. I'm gonna have breakdowns on different parts, um, make it a lot easier, but just give you something to go off of. So, technical analysis is essentially looking at the past to make assumptions of the future. A lot of people like to say predict. I like to say react. Because a lot of people, when they predict things, typically they end up being wrong. I'd rather look for certain things that the market does and react to those. For instance, something that jumps out to me right now, um, technical analysis wise, is that there was a major trend line that was broken, and a trend line essentially means that price is trending. So I know you guys know, like when something's trending on Twitter, or Donald Trump says something, and it starts trending, or some celebrity, whatever. It means that that's where price is going. Right. So I actually like to draw my lines on the wicks, so that way on lower time frames it matches up. So I would take a trend line here. This is Trading View, which I have a video on already. I'll take my trend line on the top of this wick, hit that wick right here, and look at that, it closes at the end of that body. So my trend line would be like this, right? So boom, you have right here, you have a higher high, right? It's higher than all these other points. So there's a higher high here, drops down. You have a new lower low here that broke previous market structure. um, here, and then came back up to our trend line and then dropped. So some people may see that it did not cross this line and wait for this to confirm. So this would be a reaction and then getting in at this point here, right? And then obviously at some point, the market's gonna reverse. So when we see this going down and we see it coming to this point, let's go ahead and take our candles off here, right? So when we see this in real time, we're expecting maybe this candle not to close above it and possibly respect this trend line. And respecting this trend line would be a close below this, or maybe slightly above it, and then the next candle coming in red, and the market continuing going down, right? So we're going to have a trend line break here. So I'll show you. Boom. That's another candle that closed above it. Another candle. So, right? So now we're going up. So we could actually mark this real time with another trend line. Again, I like to do the wicks, but I'm not going to cross it because it's going to, make me go all the way over there. So it's a little bit hard when you're going straight up, but it still matches up, right? So I got 3 wicks in there plus the body. So my rule for trend lines is at least 3 touches. If it's respected at least 3 times, then it is valid. So like right here, 1, 2, and then this one was a touch after this close. Boom. All right. So on this one, we're looking for when price falls back down to see if it's going to respect it. All right. So we'll go ahead and click here, real time. Well, it's still going up. So since it's not breaking this trend line here, I would definitely recommend to continue buying this. This is a buyer's market, right? We are on the daily, so on the smaller time frames and intraday trade time frames, you're gonna see like movements going down. That's why you see these pins and you see these other ones. But this trend line isn't broken yet, right? So we're waiting on a trend line break. Or look at that! Look at that tap. If you would have been in real time here, you would have seen the other candles, maybe the 4 hours going down and then shooting back up, and it would have touched your trend line, right? So it's respecting that. Some people literally only trade based off of trend lines. I use it as an additional confluence on top of other things. I like to be more accurate. But a very simple strategy could be utilizing trend lines. But again, we want to add to that. We want to maximize it. We want to get additional confluences before entering the market. All right. So we'll go ahead and click here and look. Another time it respected it. So now what happened here, it looks like it broke it on this. So we could be looking at a break of this trend line, and then we would form a new trend line. Or we could do it beforehand, now that this price has been going down for some time. Right, we can go here, that right about there, So it can go through the wick. It doesn't have to be exactly like touching it like this or anything. Because essentially what that is on the smaller time frame, there's actual full candles there, right? Remember I taught you about wicks, so we can respect that as a intermediate trend line. Boom, it drops through that point. So at this point, we know that that uptrend is probably over, right? So we would want confirmation. Boom. If you respected that, you would have got in there. So utilizing trend lines to see if price is going to be respected along that line is pretty useful, especially, like I said, when used with other confluences. Okay, so that's just basic trend lines. Let me clear these off. I'll show you guys some more real quick. Remove drawing. So let's go to the hourly. All right. So on this, we're in a downtrend. We're in a bearish market. Price is falling on the hourly. All right. So we could take a trend line here and go by these wicks. So, for starters here, this would have been my trend line right here, right? I would have been paying attention to it when price came over here. We're here, right? So at that point, we would be expecting price to either respect it or reject it, right? So obviously, you guys just saw that it broke through that trend line, so that would be confirmation, right? If you would have took a buy there after that confirmation on a lower time frame, because price retraces. Remember, it was all the way down here and then broke it. A lot of people will buy and it's going to the sky, but remember the market has pullbacks. So that's the reason why I don't use trend lines by themselves, right? So you'll see it teeter totter around that area, right? And then you could go from the bottom here. You could take from this trend or from this wick, that wick, this wick, and you got a trend line there, right? 3 taps, 3 touches, trend line. So they're almost getting into market geometry here, because what does this form when you pull this all the way down? Forms a triangle, right? And so you're trapping price. When you trap price, you're finding points in the market to get in, where it's kind of ranging. See, it's like going back and forth between this area, right? Even though it broke up over there. So it's not technically a triangle. But again, we're looking to see if it's going to be respected, right? We're looking to see what happens when it comes down to that point, right? It respected it there. It literally tapped it with a wick and then dropped below it. Drop, 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 drop below it, right? So that would have been a very good entry there. Could have been a little sniper if you got it up at this point here. You saw that it tapped. We're overall in a bearish market where it's going down. This candle pushed up a little bit and ultimately dropped. So that would have been a perfect entry there. So that's trend lines, pretty simple. I'll just bring up another pair real quick and show you how easy it is to draw these trend lines. Very, very simple. Here, boom, multiple taps here, which is really, really good. The more taps you see, the more likely it is to want to either break it or respect it, which we want either one. Remember, we're reacting. So look, it broke it here, and then it rallied up. So confirmation would have been not as keen here because it's going up. We're not. Or I'm sorry. Confirmation is good because it broke it. However, on a larger time frame, this is a pin, right? So it pinned to it, it might be a buy, and price is all the way up here first. There's a retracement, and then ultimately it breaks that point. You know what I mean? So yeah, trend line's very, very simple. You're just mapping out the trend. Like I said, I use wicks. You can also cross through the wicks and also touch the bodies, but I would never ever go through the bodies. Um, just because that's where it's breaking, like right here. You know what I mean? But I do know I'm on the 1 hour and not the, let's see the daily, right? See, it's not broken on the daily. Well, maybe slightly here. But again, there is a little bit of change. So if you did mark this up on the daily, you could have did just like this here. right? Slightly on the edge of that candle. That's not a big enough difference. Um, but that, that's how you would look at it. So there's a slight variation when you go from 1 hour to daily, because there's 24 1 hour candles and one daily candle. So there's some sort of variation, if that makes sense. Now, support and resistance. I'm gonna go over that. Let's go to the 4 hour. Okay. So support and resistance. What does it mean? So when price is supported, you'll see several areas like here, right? Price bounced off of here, right? And then price bounce off of here again. So this could be considered a support. So it's being supported like the foundation of your house, right? Bouncing off the top and it's going up. Resistance would be something like this, where it'd be like a roof, where it's not quite there, but it's almost there. I mean, it doesn't have to be A1 perfect, but it's rejecting this area. It's resisting. Price can't go past this area, right? At this given moment, right? So if you continue on and we drag this over, what happens when price meets it again? It's resisting it. It's resisting it. It's resisting it. Now, when uh, resistance gets broken, it can turn into support. So you'll see here it broke above it, and then it pinned. It wouldn't close below it, right? They gave us a little fake out here, close below before going back up, and now this is support. So if price comes down here, I would expect it to bounce off of here and go up a little bit before dropping more, or just to hit this level and then continue going up. Right. Um, so let's see. Actually, I'm going to use Euro USD here. I'll go to the daily. Be a little bit easier to see. I'm actually going to edit my width of my thing so you guys can see it a little bit better. All right. Close that off. Go over here. All right. So, and honestly, this is what I use line charts for, because it's really hard to see, or it's easier to see where support and resistance is. So this is typically what I would do if I'm looking for support and resistance. Let's see if we can find something a little bit more clean for you guys. Okay, so here, boom, easy. This is what I have this tool for, this horizontal ray, right? So price came down to here, resisted, or supported, right? Now over here, what happened there? You can see it almost looks like Batman's ears, right? So this is resistance. Hit multiple times. It was even a previous resistance, right? And then when it broke above this, it became support. Once it broke below it, it became resistance again, right? So broke above this resistance, traveled up, and then what happened when it came down to it? It supported it, right? So resistance is becoming support once it is broken. It's very, very simple. Don't make it harder than what it needs to be. Here goes another one, too. Boom. It resisted this level twice. Carried over to this level. Once it got to it again, dropped, broke above it, played around here. Now, once it dropped down again, what happened to price? It got supported, right? So this is support and resistance, guys. It's a lot easier to use your line charts, a lot easier to see. I mean, you can still see the areas on which they fall, but it's a lot easier. So let's look at current price now. This is real time. This is today. This is live, right? So where has price been supported at? If you look here, you're going to see that recently price was supported at a previous resistance. Say it with me, resistance, right? So this was a resistance. It broke it, came back to it, it supported it, right? Came back to it, dropped, but it's doing a little bit of ranging over here, right? Let's look at another key level. You see right here, price is being resisted, right? Boom, broke through it. Even though it's not tapping it exactly, it doesn't have to be exactly on it, but right around there, if you were to go to the last wick there, you would see that price would not break this area. When it did finally break this area, it came down, and then what? It became our resistance again. It was support. It was supporting price. Price wasn't falling through it. Fell through it. Try to go up, which is also a retracement that we know is going to happen. So we would have looked for this to hit back on our support on our resistance and then drop, and it came back to this level here, like I said, range. Now it's at this level now, so we're going to look for confirmation to see if it really is going to break this resistance zone, right? So it's fairly simple if you think of support as in the floor and resistance as in the roof, right? Once you break through the floor, it becomes the roof. Now you're in the basement. Let's just say you broke through your floor in your house and you have a basement. Now you have that above you, minus the hole that you fell through. And don't ask me why you're falling through holes in your house. Same thing with the roof. If you were to shoot up out of the roof into your, let's say you're an apartment, into your upstairs neighbor's house, then you now have the support of that roof, right? Does that make sense? It's now below you. So when price tries to go back down to it, it typically will struggle. Okay. So those are the main, the main technical analysis, and definitely the most basic. But you can also use those in confluence. Let's say if we had say if we had this marked up right here, let's just say, all right, and we're going to take it back to here so we can look at what we'd be looking at as it's happening. A lot of people like to teach and show you, oh, you could have caught this, you could have caught that, and it's already, you're already seeing those candles. But if you back test and go back and test your theory and test your strategy, which I'll teach you guys how to do, this will be how you will form your trading strategy, right? So let's just go to there, and we're going to throw on some levels, all right? So if you've seen this move, up over here, right? And we could even raise it up like we did and go up here, all right? Hitting these pins. So there's multiple confirmation that this is a level where price has struggled in the past, right? So we know that this is resistance. Let's say that this was formed here. We'll do both examples. All right, so the trend line wouldn't have been drawn yet, right? That we would have waited for the next third tap, which is going to come this next one. That's where we would draw that trend line, right? Once we see that, we know there's 3 points, price is being contained, and we know that there's a resistance here. Excuse me. So technically, if you see that this pins, it respects that trend line, and you know that price is struggling around here as a resistance turn, or as a support turn resistance, you would expect it to fall through that line. You know what I mean? So your trade would be waiting for confirmation as such, right? So now you're watching, you're like, okay, I just need a candle in my direction, or maybe getting halfway in the next candle. Looks like there was some indecisiveness, so you could wait out to see if this thing is going to break out here, because we're reacting. Boom, you would have had your confirmation here, even if you took the trade at this point and you waited. Um, this is what would have happened. So yeah, it would have went against you a little bit, come down. Probably would have scared you here because it pinned up, but boom, look at that. Look at that. So that's a very basic strategy. We're going to get very, very in depth with this, but I just want to at least, for the new people to show you how to start marking up charts. So get on there, make some trend lines, look for support and resistance. We're going to have some webinars making this easy for you guys. We'll have quizzes and stuff like that to make sure you're doing them right, you're drawing things right. I look forward to it. So I'll talk to you guys soon.